It's another time to do 55 minutes of business, and this time we're giving you updates from the world of business and the economy. It's on Business Incorporated. Here's what we have prepared for you. Zimbabwe is restarting minting of gold coins as bullion prices soar. Ghana Hotels Association are asking for lower utility tariffs. They say high tariffs are affecting their business. If you want to operate as an accountant in Kenya, you need this information we'll give you on the program. You're welcome to the program. I'm Amy John Mekwa. We start from the global space as usual. Crude oil prices fell in early Asian trade as investors lowered their demand growth expectations because of the ongoing trade war between the United States and China, two of the world's biggest economies. Brent crude futures lost 25 cents, that's about 0.4%, to $65.61 a barrel. WTI, on the other hand, also lost 0.3% to $61.87 a barrel. Both benchmarks fell more than $1 on Monday. U.S. President Donald Trump's push to reshape world trade by imposing tariff on all U.S. imports has created a high risk that global economy will slip into recession this year. And this is according to a lot of economists and a poll by Reuters. China, hit with the steepest of these tariffs, has responded with its own levies against U.S. imports, stoking a trade war between the two oil-consuming nations that has prompted analysts to sharply lower their oil demand and price forecasts. Barclays on Monday cut its 2025 Brent crude price forecast by $4 to $70 a barrel, citing elevated trade tensions and pivot in production strategy by OPEC Plus group as drivers of a 1 million barrel per day oil surplus this year. Several members of OPEC Plus, which comprises the Organization of Petroleum Exporting Countries and Allies, will suggest an acceleration of output hikes for a second consecutive month in May, and that meeting is supposed to hold next week, Monday. Still in the global space, gold fell on Tuesday as softening trade tensions between the U.S. and its trading partners dulled the metal safe haven appeal, while investors are awaiting U.S. economic data to assess the Federal Reserve's policy path. Look at the numbers for this afternoon. Spot gold is down in the red 0.4% at $3,329.12. U.S. gold is also down 0.2%, $3,342.40 per ounce. Spot silver went up 0.1%, $33.21 a barrel. Platinum is unchanged at this time at $986. Palladium lost 0.1% to $948.06 per ounce. President Donald Trump is at the root of all of this. He's also talking about the automotive tariffs, and we'll see what he decides to do with that in a bit. In Nigeria, the federal government's fiscal woes deepened further in January as debt servicing obligations outstripped retained revenue by a margin, according to the latest data from the Central Bank of Nigeria. According to that report, the federal government's debt servicing obligations for the month stood at 696.27 billion naira, while total retained revenue amounted to 483.47 billion, indicating that debt service alone consumed about 144% of all government earnings. The report adds that retained revenue in January 2025 only recorded a marginal 0.89% increase when compared to the 479.21 billion generated in the corresponding month of 2024. And based on this, the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, has been speaking to the private sector to get them on board, bring in the funds and capital and boost investments in the real sector.
And so the ground has been laid for what the Tinubu administration intends to bring about and deliver, and that is to open up the economy, having stabilized it, to allow the private sector to make the investments to increase productivity, grow the economy, create jobs, and reduce poverty. Across all sectors, the economy is open for private sector investment. That's what I told them, and I'm sure that message is also all I need to say to this very, very distinguished and knowledgeable audience.
And for our DSTV viewers, we'll have to lead you to Oyo State, Ibadan, the capital of that state, for the official commissioning handover of an IT center by the First Lady of Nigeria. The venue is the NITDA Center in Okebola, Ibadan, Oyo State. That's for our DSTV viewers, but for other viewers, we stay right here. All right, now staying on the program, the issue around U.S. tariff conversations are still ongoing. How Nigeria can stay insulated against the impacts of the trade tensions. The managing director of Capital Plus Limited, Mr. Oluwaseyi Odufuwa, says that the answer lies in non-oil exports. During a conversation on Business Morning today, he tasked government at all levels to develop infrastructure and fiscal policies to boost activities in the real sector.
We must begin to produce. That is the solution. We must industrialize Nigeria, and that's the only way to grow. We must begin to export, shift away from oil export to fully non-oil export. Once we have that balance, then we can grow. Now, look at our SME sector, about 58 to 59% of GDP. How well is it growing as we speak in terms of employment, in terms of creating effects, expanding, spending? How are we growing? And to get it right, that's why I said fiscal policies. We must look at security. We must look at electricity. These are very, very vital areas that will, propel growth by helping us to produce more. And, anything apart from this will only be dependent on oil to earn effects. So once there's a volatility in the international market, it will affect Nigeria.
Well, of course, that's what we're seeing now. The price of oil way below the target of the government to fund the budget. So non-oil exports also had that 24% increase for the first quarter. Should we celebrate or not? Or we shouldn't let down our guards, But let's look at the smaller businesses now, talking about driving business growth and look at digital innovation, which seems to be on the lip of a lot of people. Now we have to discuss that right here in the studio. Wilson Dike, he's a sales director and joins us here. You're welcome to the program, Wilson.
Thanks, Denise, for having me.
Great. So sales is your business. And everything we do, at the end of the day, you want to sell a service, you want to sell products.
Absolutely.
You want to sell your skills, your talent, all of that is at the top of it. And now we have, yesterday about this time, we're discussing AI adoption, digital innovation. That's it. What's different now in sales, looking at today's trend and adoption of digital innovation and AI and all of that?
Well, what's different is that prior to now, we didn't have this huge influx of technology and AI. We had traditional ways of selling, which was typically door-to-door, right? But with AI and the improvement of technology, we've seen technology and sales go beyond door-to-door, but having virtual communications and virtual conversations, and even selling products without even leaving your offices or leaving your rooms or houses, as the case may be, with the influx and the advancement of technologies. This is something that was different from the past. We see instances where we have to go door-to-door, street-to-street, try to sell into brick and mortar, like going physically to buildings, and this is something that has been diminished by the use of technology and AI. With AI, you also get to tailor and personalize people's sales journey or customer journey, so you get to understand what they want and how you can provide the service that will suit their needs, as against where you create a one-size-fits-all strategy where you just hope that it sticks when you throw it on the wall in terms of selling. So
yeah, so now I guess you work more with data, so you anticipate the outcome before you start the journey because you have the data to guide you.
Absolutely. With data-driven insights, you can understand the concerns or what customers are looking into, what they want to buy based off of their internet or use of social media and platforms. You have an idea of what is of interest to them, and you can position products that will be of relevance to them. And once they see that you have positioned a product to them, then it will give them the trigger to go ahead and make a purchase or make an inquiry, which is the start of the buyer journey.
But all of this, of course, has its own costs, yeah? Yes. And for startups and small businesses, it adds to their capital requirement and all of that. How do they manipulate this?
Well, for startups, what I would say is to be creative and be lean. Because, you know, when you're startups, most of your investments is being bootstrapped from your pockets. So it's imperative that you make sure that you are not going overboard, leveraging on all the amenities and the established organizations that are not competing in what you're doing in terms of services. A case in point could be that a startup would want to leverage upon a huge payment platform, because we see that there's a payment platform here in Nigeria that caters to half of the payment process of Nigeria's transactions. So having connections or collaboration with such platform has solved the problem for you, because you already have a reliable platform in terms of payment, which would expose you to different markets that you would ordinarily not have because you don't have the financial wherewithal to deal with. It also exposes you to marketing channels that would be available to you. So it's imperative for startups to be creative and be lean. So it's better for you to go smart than to go fast. So I think local content, deal with them, focus on them, and try to use that opportunity to leverage and expand as you move.
Yeah, that sounds like a strategy, yeah?
Oh yes, absolutely. Yeah.
But what sectors do you see this working? I know you've been involved in, you know, helping startups grow, fintechs and all of that. What sectors are the most sellable at this time, especially when you want to apply such strategies?
Okay, for sectors, we're looking at some three key sectors. I also like to touch on one traditional sector. So the key three sectors are the fintech, education, and healthcare, because this is where there's been a demand pool, especially from cloud computing platforms. We've seen that we are delicately poised in Africa to hit the $20 billion mark for cloud computing platforms. And this is spurred by demands from healthcare, demand from fintech, and demands from the e-commerce platform. So what we're seeing here is very important that we leverage on that. And the traditional platforms or traditional businesses like the agri-businesses, we are seeing more demand for drones. We are seeing more demand for IoT sensors. And we're seeing more demand for blockchain platforms, to expand their market and, of course, to boost their revenue and boost their yields. So these are the platforms that are, could use the strategy to expand, to penetrate, and of course stay consistent and lean. These are the key ones, but I also want to emphasize that with technology and the influx of technology, you could use these strategies in any ecosystem whatsoever, because AI is going into every single thing. So with AI and with data-driven insights, you can leverage on this to expand and reach more audience.
But with all of this, competition is stiffer, for everyone. So you need to guard your customers jealously.
Absolutely.
What are some of those areas you can use in customer management?
Well, the best thing is, have a strong customer relationship. You have to be as honest as possible. You have to build that relationship and instill trust in them. Now, how would you do that? It's by ensuring that you understand the customers and do not sell bells and whistles of your products, but have a deep understanding of what the customers actually want. So when I do sell, I sell to different sectors, different ecosystems, but we have an underlying similarity, an underlying backbone, and which is to understand value and deliver this value to the customers. So the first thing is have a deep insight. With that deep insight of the problems, the objectives that the business wants to achieve, the next thing is to go ahead and create a bespoke solution that addresses that need. Okay, so when you have that, customers tend to be happier. The next thing will be then again to have good relationships. You can create that relationship and build trust, because African businesses are very huge on trust. And by doing so, you have to ensure that what you have presented in your demos, your proof of concept, you deliver. And even after sales, post-sales, ensure that you do have a robust after-sales service. So that way, you are creating that long-term relationship. You are ensuring that you understood the value, and ensure you are putting on products that will help them achieve what they want to achieve.
Yeah, so what I hear you say is build a relationship, with customers beyond the surface of the business. That's
Yes.
demanding.
Yes, that's demanding, but as a salesperson, you need to build relationships. It's a key thing. It's one of the strengths of a salesperson. You need, because, the difference between your products and the other products might be, few and far between. But what stands a chance for you to get a foot in the door would be your relationship and your relationship building skills. You need to understand their pain points. You don't need to be so quick in wanting to sell. You need to have that understanding of what they want and how they want to achieve. You also have to have a good stakeholder map to understand who are the people in the stakeholder ecosystem that will have touch points that may influence or put a spanner in the works for you trying to get a sale or trying to get value. Because in the end of it all, you're trying to put value into this. You need to ensure that everybody, the stakeholders that will be interested or will be a party to the growth or the use of that platform, are well aware of the value that your product is bringing to them and how it can get revenue for them or ROI for them. So, case in point, how it's going to generate more revenue for them and how it's going to cut costs for them in a nutshell.
Yeah, because I also wanted to say this, because these days we talk a whole lot about strategic partnerships.
Yes.
So it's not just about with your customers,
Oh, yeah.
but also down your value chain.
Yeah, absolutely.
You need to build partnerships
Absolutely.
with your raw material provider, your end user, your own end user, which may become a raw material. So it's that's why I say it's stressful. It's very demanding keeping all of these relationships.
Yes, it's very demanding, but what we need to understand and what we need to bear in mind when we are going through this journey of still driving innovation into businesses, to sectors, is what you want to achieve at the end of it all. So, which is the value you want to get in. I'll give you an instance. There was a large payment platform in Africa that had to partner with a financial institution and with telcos, large telcos in Africa, just to expand reach. And then they were able to get into untapped market that they didn't or wouldn't have had the access to get onto, and they were able to get a far reach. So if we bring that down to startups that are trying to drive innovations to business, you can also leverage on, for instance, if you're an e-commerce business, you can leverage with logistics companies that have sorted last mile delivery already in Africa or in Nigeria, and to help you to push your products to the last mile. All right. So this is one instance. You can also, if you are a product or e-commerce business that wants to get onto payments, like I said, you can leverage on the largest payment, fintech payment provider in Africa, which will make you seem reliable, which will help you get access to marketing channels and distribution. So these are the things that you need to painstakingly do, because, of course, it's a very competitive ecosystem. There are a lot of fintechs, but you just have to think outside the box and make sure that what you're selling, you are also getting a personal touch to it in terms of creating different experiences as you navigate from customer to customer. That is what will make you stand out. That will make you unique in what you're trying to do.
No, so marketing, marketing is not the same it used to be. It has a different face now. What advice would you give to people who would say, I don't know if they still study marketing in schools.
Yes.
Who would say, I love marketing and all that. It's a different ball game now, and you need tips like this to survive.
Well, for marketing, it wasn't spared with the AI. So AI avalanche, I'd like to say, and I'll reckon that you use as much as possible many marketing tools. There are many digital marketing tools that will help you understand marketing journeys, help you to calibrate online real time to understand if the campaigns that you're running are of relevance and how to tweak them. With marketing tools, and what I did in the past is that we adopted marketing strategies working in a particular region and lifted it and put it in that region based off of performances. And because of AI and technology, you can on the spot understand, or within a few days understand, if a marketing strategy is working, and you can find ways to tweak them, as against waiting until the end of a quarter or the end of a campaign to say, this marketing campaign wasn't really it in the first place. And that would have been your money's lost, time's lost. So this is something that you can leverage on to ensure that you get the marketing, the best returns on your marketing budget and marketing strategies.
All right, thank you so much. Sounds interesting, even though I don't think it's my thing. But
yeah.
Wilson, DK Sales Director, thank you so much for the tips this afternoon.
Thank you for having me, Ini. It was a nice speaking with you.
Same here.
Yeah.
All right, let's take a break. When we come back here on Business Incorporated, we head to the markets. Stay with us, please. Welcome back. It's still Business Incorporated here on Channels Television. We head to the markets now and see what the numbers are telling us. If we would have those numbers, that's it. So after celebrating the bull last night, I guess we have to face another reality this afternoon. But it's a small drop, and hopefully we will recover before the close of trade. We got back to this level this time yesterday, 106,000 level. So hopefully we will keep that. Let's not look at the number for now, but let's talk about fixed income at this time with Caleb Alimi, Chief Dealer, Providus Bank. We're focusing on the outcome of the FGN April bond auction with 350 billion naira target by the DMO, and we see from the calendar for the second quarter that the government is willing to borrow less this quarter compared to last quarter, and so a lot of questions have been going on. But let's find out if Caleb Alimi was in that meeting where the federal government, DMO, through the DMO, decided to borrow less from the market in the second quarter. If you can tell us why. Hi, Caleb. Good afternoon.
Good afternoon, Ini. Thank you for having me.
Good to have you. So, why is the federal government borrowing less this quarter? Do you know? Did they tell you?
Well, I think the last time I was on the show, I talked about the federal government being sensitive to the cost of them. So it's not that they're going to borrow less, they're just very sensitive to the cost. We look at the bond auction results, we'll find that it's maintained exactly the same rate as last month's auction. This time they offered 350 billion, like you said, even though subscriptions was in excess of 500 billion. They sold only about 397 billion at a maximum rate of 19.99%, which was exactly the rate they did last month. So what we find is that the federal government is sensitive to borrowing expensive. They sort of like peg the rates in their minds. If the lenders are coming, or if the lenders are coming at a rate higher than that, then they're not willing to take up the funds.
But they still have to borrow somehow, Caleb, especially at this time when crude oil prices are declining. And, we know what targets we have on our budget. And so if they're not borrowing, are there other avenues that they are looking to? Maybe we'll do another Eurobond.
Eurobond at this time may not be a good idea. I don't think they'll be looking to that market currently because of all of the headwinds that the markets are facing from the election of President Donald Trump in America and all of his trade wars is making that, international funding space kind of expensive and kind of unpredictable. So they may not be looking towards Eurobonds just yet. It could come on maybe later in the year when the US Fed eventually cuts rates. And then if those interest rates look lower, they may go to that market. But for now, they will still look locally. While they are showing resistance to the expensive interest rates or the expensive rates that investors are looking for, they will continue to make bilateral arrangements, approach the IMF and other funding partners to raise these funds. Surprised sometime, towards the maybe third quarter, we could see the DMO actually then come out in big numbers and take up the funds that they need. If they're not getting that traction, through bilateral arrangements, if the Eurobond market is inaccessible because of the cost, then they'll have to come and, do what needs to be done locally.
Then I guess we can, at that point, expect an increase in yields.
Yes, at that point. But for now, we're seeing a lot of resistance. If you just go back to the Treasury bill auction as well last week, we saw that it closed at 19.6%, lower than the previous rate of 19.63, where 19.63 repeats itself 2 times, and then you then have a 19.6, a decline. We saw the decline of the 90 days, the 180 days. So they're just showing that they don't want to borrow. Whenever they see that the funds are available at the rates that they have in mind, then they come and borrow. But like you said, if this persists, if the revenue targets continue to be missed, and their bilateral arrangements are not working out and Eurobonds is inaccessible, then rates have to eventually move up.
All right, Kile, what else is happening in the market? At least for this week. I know Thursday is May Day, so market should be closed. But what else is going on around?
So today there's been an home auction. There was an home auction last week where the central bank floated 500 billion, but ended up selling about 1 trillion, just trying to control liquidity in the market. But the market still remained positive, on the back of inflows from the federal allocations and all of that. So the central bank floated to gain 500 billion. We are waiting for the results. We expect that it will be well subscribed as well. They'll probably oversell. The central bank, interestingly, is happy to, quote and unquote, pay the expensive interest rates because the last home auction closed at a yield of around 28%, a discount of 22.73 thereabouts, which is a yield of about 20%. So that could happen again, and that is the price to pay for mopping up liquidity and keeping the exchange rate stable. Yeah, we all agree that the exchange rate has remained stable for some time.
Yeah, but Caleb, I'm just curious. I mean, I've forgotten the figure now, but last time we saw an increase, I think that was for March, of currency in circulation, and yet we see the CBN do this aggressive mop up, and I'm wondering, where is the leaking coming from?
Well, I think part of the leakage has to be how the statutory allocation are shared. Every time the central bank, every time the FAC is paid, that's the word is called, every time FAC is paid, it's almost like creating more money into circulation. So I think that is one of the avenues where cash in circulation or money in circulation or money supply continues to increase. That monthly sharing of FAC in Naira creates additional supply of money to the market.
I guess we should do more of e-transactions even with the FAC.
I'd agree with that. That would, really address that. And if also FAC will be shared, quote unquote, in dollars, where the government then sells that dollars to the market and mops up Naira from the market, that can also help money supply.
All right. I guess that's a conversation we can follow up in the future. Caleb, thank you so much for your views this afternoon.
Thank you for having me, Ine. Good afternoon.
Good afternoon. All right, let's see other markets now outside Nigeria. So while we saw, of course, the NGX is in the red this afternoon, could we go back to Nigeria, please? Yeah, thank you so much. So for Johannesburg, they've gone even beyond the 90,000, gone up to 91,182 intraday. They've gained more than 0.5%. If we could see Egypt and the other market, that would be Kenya. That will really be helpful. Guys behind, do help me. So we have Egypt in the green at 0.3%, 32,112.38. While for Nairobi, that's Kenya, closed Monday in the red at 125.53. Let's go to other markets now. The Middle East would be our next stop. Dubai is green, almost 1%, 9,546.44. Abu Dhabi is also green, almost 0.5%, 5,237.39. Other parts of that market, we see the Tadawul is red intraday. Qatar is on the flip side, 0.2% at 10,325. Let's go to the United States at this time, where S&P 500 moved lower, losing earlier gains. But I mean, yesterday at this time, the features were in the red, like all of them in the red. But we see a bit of recovery for the Dow Jones, S&P 500, and Nasdaq still in the red. It's earnings season, so results are being shared. General Motors reported better than expected profit, but said it was suspending future guidance as share buybacks as it awaits clarity. HSBC also is doing buybacks, so those and other moves have driven the market to this territory. But let's join Maria Bird, our correspondent in Washington, to see more details on yesterday's trade.
The U.S. stock market started the week off mixed as the Dow Jones was up at 0.28%. The S&P 500 was just above flatline at 0.064% up, and the heavy tech Nasdaq was slightly down at 0.1% down. As many investors are watching to see will there be any additional trade wars. They are watching to see how the global economy is responding to the U.S., specifically watching the U.S.-China trade war, as there is much hope that there could be a subsiding in this trade war and that we could see some negotiations in the near future. Americans are continuing to watch to see if this will have a positive impact on the U.S. economy.
Thank you, Maria. Let's head to Asia now, where market traded mixed on Tuesday, tracking Wall Street after U.S. President Donald Trump's administration said that it would move to reduce the impact of auto tariffs, while investors also assessing company earnings. We haven't heard the details of that relief on auto tariffs, but that's what we have for now. So we see Nikkei in the green, 0.38%, 35,839.99. The Kospi is also sustaining that red color, more than 0.5%. Hang Seng is also red, 22,008.11 after it gained 0.16%. Mainland China, India's Nifty was flat, while broader BSE Sensex edged up 0.1%, and Shanghai is in the red. So that's what the market is looking like, a major market that we track. Let's head to Berlin now and see what's happening. And we do have Chiponda back, having enjoyed Lars for a couple of weeks now. But this week, Russian President Putin is proposing a 3-day ceasefire in May. That would come, of course, as a pleasant news for everyone, and came after U.S. President Donald Trump warmed up to the Ukrainian president. I'm sure if you saw the video at the funeral of the Pope, you would see President Trump and Zelensky after the fire that happened in Oval Office. Well, let's see what speculations about the future of Russian energy exports would mean to Europe as Chiponda joins us. Hi, Chip. Good afternoon. Good to have you back on the program.
Good afternoon, Ini. Nice to be back.
So what does this mean? What can we expect? We know that Russia is a major energy supplier globally. What would it mean to Europe if we had this ceasefire and then we have their supply back into the global space?
Well, I mean, for months now, of course, there has been a lot of speculation regarding the fact that both the United States and Russia do want gas exports via Nord Stream to resume. And just as a reminder, Ini, those are the pipelines that transported Russian gas exports to Europe via Germany. Now, Russia's foreign minister, Sergei Lavrov, has mentioned that discussions with the United States have included the Nord Stream pipelines. And there have, of course, also been reports that have said that American investors are interested in buying Nord Stream 2. Now, that is, of course, the Swiss-based subsidiary of the Russian energy giant Gazprom, which, of course, is owned by the Russian state. And then, of course, here in Germany, we've also had some politicians saying that they would welcome the idea of repairing the two pipelines. Now, of course, it is all of that, Ini, that has led to the speculation about a potential resumption of Russian gas exports in the future. But I don't think it's quite there yet. So it is maybe still early days to consider what it would really mean for Europe.
Yeah, because I'm thinking this is a proposed 3-day ceasefire, and I know how long it took to win off Russian energy, even though the infrastructures have been there. So I'm just, is it realistic, the idea that Germany and Europe would buy Russian gas, and, you know, the sensitive relationship between the two countries?
Ini, it is highly unrealistic because, of course, nothing Russia has done since its full-scale invasion of Ukraine has made European leaders feel that they can trust the Kremlin. And, of course, while the Trump administration has been trying to put pressure on Kiev and work with Moscow to secure a peace deal, a prolonged ceasefire or even an end to the war won't change the fact that European leaders do not see Russia as a reliable partner. And that is, of course, something that even business representatives here in Germany are also concerned about, despite the fact that Europe's biggest economy, of course, has borne the brunt of higher energy costs. Geopolitics, of course, have become a major business concern. And of course, the political opposition to the restoration of Nord Stream is very strong in Europe. And the EU has said it wants to quit all Russian fossil fuels by 2027. And it is set to release a strategy and roadmap on how it plans to do that on May the 6th. So that is, of course, something to look forward to next week. So we will, of course, be getting a bit of clarity regarding EU plans to exit Russian energy entirely.
Yeah, honestly, Chip, I think it would take a lot to repair that relationship because, I mean, even winning off Russian energy sources was was a hard thing to do. But let's see what are investors doing at this time.
Well, European shares are trading higher today, and the pan-European stock 600 is up around 0.4%. But of course, there are a lot of moving parts for investors. They are awaiting, of course, U.S. President Trump's next tariff move, which you just mentioned there regarding the auto industry. And of course, there's also more economic data this week and a slate of corporate earnings. Fortunately, there is some good news from Germany. Now, the country's biggest lender, Deutsche Bank, posted a whopping 39% rise in its first quarter profit, and that is the highest quarterly profit Deutsche Bank has posted in 14 years, Ini. And of course, there's also further positive news from Germany for a change. A leading survey shows that German consumer confidence improved unexpectedly. Consumers here are shrugging off concerns of an economic downturn and uncertainty over tariffs. It looks like they are hoping for more stability from the incoming government.
Yeah, I see that that incoming government is giving a lot of hope. But I mean, I'm sure you guys over there will count us down into when the government comes in, and then we'll follow their works. And hopefully, consumers will not be disappointed.
That's what we're all hoping, Edie.
All right, Chip, thank you so much. Now let's head to Africa. Zimbabwe's central bank is again issuing gold coins that it scrapped 10 months ago, a step it took to ramp up the bullion stockpile used to back up the local currency. The coins were first issued in 2022 as a store of value for pension funds and individuals seeking safe haven from frequent bouts of inflation and currency volatility. A surge in global gold prices by about 25% so far this year, fueled by the uncertainty of trade war launched by US, is widely expected to be a boon for Zimbabwe, who is a primary producer of precious metals. The value of Zimbabwe's gold shipments jumped $395.9 million during the first quarter of this year, all the way from $303.1 million a year ago. That's according to the Reserve Bank of Zimbabwe. Well, let's talk about stockfish. It's Commodities Day today. And yes, it's stockfish period. I believe especially the women would know. Even the men will know it. I mean, you eat it in your soup and all of that, especially a lot of Nigerian delicacy. And we hear that the price has gone up by about 300%. In 2025, the price has remained, that was last year, but this year it has remained relatively unchanged, about 89,000 for a 3 kg bag. And and I know this is mostly imported, but let's find out what Tomiwa has discovered about it. Tomiwa Ajewale is an analyst with Financial Derivatives Company. Hi, Tomiwa, welcome to the program.
Good afternoon, Nini. Thank you for having me.
Great. So what have you found out about this stability in the price of stockfish this year, at least so far?
Yeah, when it comes to stockfish in Nigeria, it's a very highly cherished ingredient in Nigerian cuisine, enjoyed by all age groups and a lot of demographics. But even with that, with how popular it is in Nigeria produces little or none of the stockfish that we consume. So we import virtually all the stockfish consumed. We import a lot of it, and what happens is that this leaves the price of stockfish exposed to external market conditions and exchange rate dynamics. So with the 300 or 200% increase we noticed last year, and especially in the past 2 years, that was in sync with the large sharp swing in the naira. And now that the naira is relatively stable in 2025, that is helping to keep the price of stockfish also stable this year so far. So that's one of the key reasons why the price has been stable, because there's been lesser volatility in the price in naira this year compared to the last 2-3 years. Another key reason why the price has been stable is what we call price resistance. So with the sharp increase in price in the past 2-3 years, it reaches a level where consumers are like, oh no, I can no longer consume this. I have to reduce my demand. So when demand goes down, prices also come down. So because they've been because of the price resistance of the increase in the past 2-3 years, now consumers are reducing their demand for the product. So that's why the price has remained relatively unchanged in 2025.
So do we have a lot of alternatives? Do we see consumers turning to alternatives?
Yeah, so when it comes to stockfish, again, as I said, Nigerians really enjoy stockfish. So when it comes to stockfish, if you want stockfish in your cuisine, in your meal, I don't think there's a direct substitute that's going to replace it. So what we've seen is that although the demand has reduced, there's still strong demand for stockfish. What people do is they reduce the frequency or the quantity that they consume. So now it's reserved for special occasions, it's reserved for festivities, and now that there's this miniaturization, you can buy in smaller quantities. So when you want to enjoy stockfish, you still go for stockfish, although you frequency at which you consume it has reduced. But when it comes to substitutes, although there are no direct substitutes, there are obviously other cheaper proteins like shaki, pomo. So yeah, there are some alternatives that consumers, especially the lower income level, go to. But when you want stockfish, you go for stockfish.
Yeah, and we know that stockfish in Nigeria is 100% imported, I think mostly from Norway. I wonder how much recent bottlenecks have disturbed that forex, for instance, logistics, port congestion, and all of that. How much change have these bottlenecks brought to the importation of stockfish into the country?
Yeah, so again, just the fact that you said like almost 100% is imported would always be subjected to external market conditions. And since it's imported, we're looking at logistics. Nigeria's infrastructure level is not the best. So when it comes to even storage facility, when it comes to transportation, when it comes to even the fees that they pay to import it, those are some factors that constrain the supply and also the price in Nigeria. But even if you come home to our domestic production and consumption. The forecast currently now is that between 2019 to 2028, fish consumption in Nigeria is declining annually about 7.1%. So, in production and consumption locally, we are seeing a decline, and that is a key concern because, fish is a very cheap source of protein. So, I think they've been generally a neglect in that industry locally, and so I think we need to begin to see changes where there is investment finance for feed. Again, climate change is also an issue. So we need to begin to improve our infrastructures so that we have the capacity to weather these storms and then not allow the fish sector to decline.
All right, Tomiwa, thank you so much for sharing your findings with us. Tomiwa Ajewale is an analyst with Financial Derivatives Company.
Thank you.
Other stories in Africa, the Ghana Hotels Association has renewed its appeal to the government for lower utility tariffs to enable the hospitality industry operate smoothly, expand its facilities and create more jobs in the broader national interest. It said the high cost of utility tariffs was inimical to the growth of the tourism and hospitality industry. The president of the association says there were about 5,000 licensed hotels in the country, while some unlicensed hotels were also operating. He said that apart from the high utility tariffs, the high cost of food and beverages was also impacting their industry. Kenya's National Treasury has proposed that all professional accountants must obtain licenses to practice. This has been proposed in new bill to fine violators. The Accountants Act Bill 2025 outlines the examination and registration processes for accountants in the country, with an emphasis on competence, respect for ethical principles, and compliance with international accounting standards. It establishes high professional standards for accountants. The bill aims to rectify discrepancies in areas like inclusion, equitable justice administration concerning registration, and disciplinary actions for all accountants, whether or not they are in practice. And still in Kenya, the government has budgeted 33 billion Kenyan shilling under the National Youth Opportunities Towards Advancement and Kenya Jobs and Economic Transformation Project to address unemployment. The Cabinet Secretary for Cooperatives and Micro and Small Enterprises, Wycliffe Oparanya, states that at least 1 million youth will benefit from the 5-year initiative. According to him, the YOTA program supports underprivileged young men and women with income-generating appliances and equipment to increase employment and savings. The CS is asking young people to sign up for the scheme, stating that they should receive training before receiving funding to start earning money. It reveals that a minimum of 70 young people will be chosen from every ward in every constituency nationwide. Still in Kenya, Betting Control and License Board is suspending all gambling adverts in Kenya for 30 days. The board raised concerns over the proliferation of gambling activities across the country, saying promoters mischaracterize it as an investment opportunity. The board also appoints a multi-agency team to enforce and formulate strategic interventions and policy recommendations for responsible gambling. The board is asking the National Assembly to expedite the enactment of Gambling Control Bill to empower the sector, regulate, enforcement, and supervise powers. The suspension comes after reports claim that Kenyans spent 766 billion Kenyan shilling in 2024 on gambling and betting. However, it's dismissing the report, knowing that the figure inflates the real size of the betting market in the country. Trade between Egypt and Australia has recorded $494 million in 2024, and that's down from $558 million a year earlier. This is according to recent figures from Egypt's state statistics agency, CAPMAS. Egyptian exports to Australia went up $50 million from $45 million in 2023, while imports from Australia fell $444 million from $515 million. Australian investments in Egypt stood at $3.7 million in the 2023-2024 fiscal year. That's down from $4.7 million the previous year. Egyptian investments in Australia reached $500 million compared to $16.1 million the year before. Egyptian remittances from Australia total $61 million, and that's down from $54.6 million, while Australian remittances from Egypt dropped to $6.6 million from $9.2 million. We head to South Africa, where the rand weakened slightly in early trade as investors await the finance minister to say when he will present another revised national budget. The finance minister has to make further adjustments after scrapping a contentious hike in the value-added tax that was fiercely opposed across the political spectrum. That was last week, and it watered down to a 1-point VAT increase spread over 2 years in an amended March budget. But most political parties continue to reject the plan, and last week he caved into the pressure and withdrew that VAT increase altogether. All right, it's time to see what's happening in the crypto space now. Let's see what's happening with the numbers at this time. Bitcoin is down. Stabilized a whole lot around 95,000 between yesterday and today, but we see it's lost a bit of that. So it's now 94,969.81. Ethereum is still in the green, still around 1,000, under 2,000, 1,008. Right here, a lot of the altcoins are actually more in the red today. But let's talk to Rume. Rume, he's a financial market analyst, to tell us more about what's happening in the market. Hi, Rume. Good afternoon. Welcome to the program.
Good afternoon, Ini. Nice to be here.
Yeah, so yesterday when I had this conversation, I was hoping from 95 we were going at least heading close to 100, but now we're back to 94. Not so much of a difference, but, you know, are we going down way again?
So the truth is, we are still in the wait and see period in crypto right about now. The tariff plays a very huge role. For example, someone will not be buying a whole lot of crypto right about now, or maybe Bitcoin, knowing fully well that this tariff regime that we are is most likely going to affect the proceeds at the end of the day, maybe capital at some point. So you have to always gauge and see where you come in. So everyone is actually in the wait and see mode, seeing the next thing that Donald Trump, you know, he could just decide to take any action on either on his X account or maybe through social, you know. So everyone is watching. There's the genuine interest to get crypto. A lot of persons are interested. But one very important thing that is actually making the market really look really good in the long term is stablecoin payments. A couple of people are actually seeing the importance of borderless transactions using various stablecoins, either USDT Theta or USDC by Circle, or in most cases, the CNGN backed by the Naira. You know, so it helps to cut that middleman that you see the regular platforms like MoneyGram or Western Union you have to actually we go through. So it just uses stable coins helps to make all of that easy, very convenient, and as well very efficient.
So there's a report going on, I don't know if you've seen it, saying that Trump's first 100 days is the worst in history, despite crypto promises. But we know that late last week there was a talk about a crypto dinar, and then we saw the Trump meme coin surge. I think it went up to about 70% or so. So would the crypto community say that Trump's first 100 days is about the worst in history? Is that the conversation you guys are having?
I really don't think that is really sincere to say. Honestly speaking, Donald Trump actually has done, as a president, what no president has done ever in this world. He recognized crypto, brought crypto key players to the White House to discuss the way forward, and also stablecoin. He does a couple of all of that. All of the hostile regulation by enforcement, which we have seen in various parts of the world, even our own country inclusive at some point. So he has made things really very easy and seamless. But not to say that a certain mistake has been made at some point in launching coin as well as his wife and all of that. So but the truth is, as we get further, as time goes on, a lot of things are going to be clear. Sometimes mistakes some of this mistake comes in, then we have a way of maybe reshaping them and becoming better. I don't think it's sincere to say Donald Trump. Donald Trump actually gave crypto a bright appearance globally. Crypto and the entire industry became something that could be recognized. And afterwards, a couple of countries started seeing them embrace, making it look like the US is making the lead and everybody has to follow. I think Donald Trump has done a lot in the industry, keeping to his campaign.
All right, seems there's a glitch there with Rumer's internet. I hope he can come back, because I would like to ask him, remember the reserve, Bitcoin reserve, that's, hello Rumer, are you back?
I'm back.
Okay,
yeah,
so let me just ask you, I was just about to say, remember the reserve that's President Trump, the Bitcoin reserve, and when the details came out, you guys were not happy. Have you forgotten that part?
Yeah, so the Bitcoin reserve is very, very technical. More like saying that it's widespread. The US is going to be buying Bitcoin. But for crying out loud, the US has Bitcoin stockpile, China has Bitcoin stockpile, and a couple of other countries. I don't think we in Nigeria have started thinking about that yet right now. But I think the idea of using taxpayers' money to buy Bitcoin hasn't really come to place. I also think that some of those things has to go through Congress. The US is an organized society where things are not done haphazardly. So I will not fault the US president for the Bitcoin was not fully implemented, but I know before he leaves office, all of that there's going to be a caveat to it at the end of the day. But he has spoken about it. It's a couple of congressmen, also Senator Loomis, actually, which is also known as the Bitcoin mummy, has actually spoken to that over time. Also, a bill she's brought forward on all of that, So, but it's a gradual process. I can't be really offended because I've seen the worst in the past, and now it's coming into place that crypto is a thing globally.
All right, and you said that the market is at a wait and see stage now. What are we waiting for? Is it a 90-day, or is there any other thing we're waiting for?
So the global economy actually affects the market. The market is forward thinking, right? We might see a bit up movement, but a lot of people shouldn't fall for it. This tariff period where the market is very, very volatile, and all of the market entirely, it is not something that it's not a plug and play thing. It takes a pretty while, a month, 2 or 3, thereabout, for the market to absorb all of that. You can even see a couple of companies are cutting costs because the uncertainties is high. So I really don't think it's something that somebody wants to rush in. It's better you wait and get the best of the opportunities in the industry than just jump into it and make mistakes.
All right, Rumelfi, thank you so much for your views this afternoon.
Thank you very much, Ini. Always a pleasure.
Great here too. All right, so that's it on the program. Thank you so much for being a part of Business Incorporated again today. Another episode comes your way tomorrow, starting, of course, with 10 a.m. Business Morning, and then update at 1 p.m. Business Incorporated. But tonight, I'll see you for the stock market report during the news at 10. Join me then. I'm John Mekwa.